Hey everybody, Jeremy here from Escape Velocity Trading. Over the last couple of days, I received a question from someone in our Facebook group asking me if I could go over a little bit more detail describing what constitutes a bull run and how to know if we are in a bullish run. So just wanted to take a look at this. This was a comment from Gates on our weekly market bias report from 3/3 here just a few days ago on Sunday. And you can see he was asking me if I could make a post on how to know when you're in a bull run, because on these market reports, I am updating our community every week before the market starts trading on Monday, talking about my bias, what I see, whether I see bullish price action, meaning prices going up, or whether I see bearish price action, prices going down, or neutral, and helping our community to get in front of that price action so they can make the most from the trading week. So if we dive into our charts, and I'm just going to move the video here, get this out of the way. First things first. When you are looking at a trend, you are defining the trend based on pivot points. And a pivot point has to be built with at least 3 candles. So let's zoom in here real quick just on one of these so you can see what I'm talking about. So this is a pivot high, right? The wick right here on this middle candle at $431 was our pivot high. Now, to be defined as a pivot high, we have to have a preceding candle leading up to it with price direction going up. We have to have the high candle, and then we have to have another candle confirming price going down and breaking below the low of that candle. So that is just the simple definition of a pivot. You have to have at least 3 candles, and you have to have them defining the middle candle as the high or low price. So looking at this chart, we're looking at 2 years worth of SPY, the S&P 500 ETF. And you can see that we were in a downtrend defined here. Now, the definition of a downtrend is that you are consistently making lower pivot lows and lower pivot highs. So right here, we had a pivot high, and then we set a low, and this pivot high right here was lower than the previous pivot high. So we set a new lower pivot high. Then we came down and price broke below the previous pivot low, kept going, and set a new lower pivot low. New lower pivot high, new lower pivot low, new lower pivot high, new lower pivot low. Now, let's zoom in a little bit here, because you can see in this sequence of lower pivot highs and lows, we had the low here and the high here, and then we set a new lower low barely, but then we came up and we broke above the pivot high here. So does that mean that we are now in a bullish uptrend? Potentially, but not necessarily. This conversation has to do with the time frame you are looking at. If you were looking at this setup from a shorter duration, like an intraday day trading chart, yes, that would have reset and been our signal potentially for a new start to a bullish run. On the daily chart, someone could have argued that that might be, this is a W formation, which is a candlestick formation that signals potential for bottoming price action. But all of our moving averages were sloping down. We were below the 50-period moving average. And we had this diagonal support line, if we draw from the previous pivot highs, that price had not gotten up above. So there are more things to it than just pivot analysis, but pivot analysis is the biggest part of this conversation. So personally, I would need it to get back above this diagonal line and back above the 50-period moving average to reclaim this as a bullish uptrend. Now, if we remove those drawings and keep going, we're going to zoom in again. So this was a fake out. Some traders did probably trigger in here and they probably got faked out. But then we met with resistance and it plummeted again, set a even lower pivot low. And we chopped around a little bit. and then we broke out of this important resistance level, and that resistance level is defined by all of these major pivots coming right into that same price point. You can see 1, 2, 3, 4, and the gap right there. So 5 different price touches, all right there at that 390 level. So we know that 390 level is going to be very important, right? Then price breaks above that resistance zone, sets a new higher pivot high compared to the previous pivots here, and a new higher pivot low based on these. And that higher pivot low, what did it do? It came right into that important resistance zone from previous touches that is now acting as support. Support and resistance usually shift back and forth. Something that is resistance for a while, when finally broken, usually acts as new support. So from this point on, we had a short-term uptrend. We had a new higher pivot high and a higher pivot low, higher pivot high, higher pivot low, higher pivot high. And then we kind of stalled a little bit here. Where? At the moving averages again, right? This is the 200 period moving average, another really important one that a lot of traders focus on. And then we broke and we set kind of an equal pivot low right here. It was just slightly above, but in the same range as the consolidation right here. But we set a new lower pivot high and then broke that. So right here on the break of this lower pivot low was the start to now what was a short-term downtrend again. So then we go down, we find support where? On that $390 price point that was the old support and resistance line from back here, playing out again. Came back up to where? To the moving averages and to the previous pivot low. And we set another lower pivot high, and then a new lower pivot low, lower pivot high, lower pivot low. Come back up, chop a little bit, still failed right here to make a new higher pivot high. But then we did break through and we set one here, followed by a new higher pivot low. So now we're back into a short-term bullish uptrend. Higher pivot high, higher pivot low, higher pivot high, higher pivot low, barely higher pivot high, higher pivot low, higher pivot high, and then equal pivot low. So right now that we are setting equal pivots, we are in a neutral range. So we have bearish range, we have bullish range, bearish range, bullish range, and now we're neutral until we break to one side or the other of these equal pivot highs and equal pivot lows, right? So then that trend keeps going. One thing that is super important to understand with this is what is happening when we have these changes in direction. What is this telling us? This is telling us basically that there's been a massive shift in supply and demand. And you can see that all pivots are not created equal. Sometimes we have big pivots where if we look at it on a longer time frame, you can see this one really stands out to you. You can see this one stands out to you. This one here stands out to you. This one here stands out to you. The one up here that is probably in the process of forming will stand out to us likely. But then we also have smaller ones, like the one here and here. We have here and here, here and here, this one and this one. And then if we want to get even more micro, we have these tiny ones that are just a couple of candles each. So for a pivot to form, you have to have at least 3 candles. You have to have an up candle for a bullish pivot at least, or a bearish pivot at the top end of a bullish run. You have to have up candle, you have to have a signal candle, and you have to have a lower candle breaking the low of the signal candle. So you have candle 1, candle 2, and candle 3. The importance of pivots are going to be based on how many candles are in its formation. If we have just a candle up, a signal candle, and a candle down, that's a minor pivot. If we have multiple candles leading into that, that becomes more of an intermediate pivot. And if we take this and we go out to a longer time frame chart, you can see clearing out the noise of the small pivots from the daily chart. This really highlights the major ones right here, right? So you can see the staircase being stepped down one layer at a time, and it eliminates a little bit more of that noise that we had on the daily chart. So when you are looking to see whether you are in an uptrend or a downtrend or a neutral trend, it is really important to look at the relationships of the major pivots. And if you're on a daily chart, the mid-tier pivots as well. Another really big important thing is the moving averages. You'll notice that I have 4 different moving averages on pretty much every one of my charts. This gray one is the 200 period moving average. The pink one is the 50 period moving average. The blue one is the 20 period moving average. And the green one is the 9 exponential moving average. And the number associated with each of those just means that the previous X number of candles, so the green one is 9 period moving average, so it is averaging the price of the last 9 candles. And it's exponential because it is weighting the data for the most recent candle more than the 9th one back. Same thing for the 20. This one is highlighting and averaging the last 20 candles. But it is a normal, simple moving average, not an exponential. So each candle carries the same amount of weight in the average. And the reason that I have these on my chart is basically that these are the 4 most widely used moving averages by traders, hands down, and it kind of becomes a self-fulfilling prophecy. So you can see when all of these moving averages were going up, we were in an uptrend. The 9 crossed below the 20. This was your first signal that this big uptrend here might be in trouble. The shorter term moving average crossed below the longer term 20. And then eventually the 20 crossed below the 50. And once all 3 of those are rolling over, we are firmly in bearish territory. Now, we also have this diagonal resistance line. When we broke back above that diagonal resistance line, price set a new pivot high in relation to the previous major pivot. And when we pulled back, we set a new pivot low that was slightly higher. So we had this one, and then we had a slightly higher one here. So that was the start of the bullish run in terms of pivot relationship, but we still kind of had some chop, and we still needed to clean our moving averages up. We want to see the short-term ones get back above the longer-term ones again. So right here is where you see those moving averages kind of clean themselves up. And this pivot high is where we want to get above for the official start of that new bullish trend. We'd been bearish here. We're kind of neutral within this range. And then when we officially break this pivot and set a new pivot high right here, moving up to the pivot high with all of our moving averages set and a new trend line developing to the upside, that is where that new bullish trend started. So I hope that helps, guys. Let me know in the comments if it does, if you want to see more information like this, helping you to learn to trade and identify trends, and I will catch you next time.